let's connect with our experts then and try to find out what are the data points that are building up in terms of the benchmark indices and what are the sector specific action we are witnessing. And Sneha Seth is here with us on the show. Hi Sneha, good to be speaking with you. What to ask Sneha, because it's just a deep sea of red across the screen, and both the benchmark indices are not holding up well. Which are the next support levels as per you?
If you look at the market, yes, we have seen decent correction. If you see the rollovers for last series, the rollovers were quite decent. In fact, I believe decent amount of shorts have been rolled over to the March series. FI's long short ratio is also around 16, which clearly indicates that it is in the oversold territory. And until we don't see any buying interest from FIs in the future segment or in equity segment, the market may, continue to be in a pressure only. As far as supports are concerned for Nifty, I believe there is a support around 22,200, followed by 22,000. That is the support zone for Nifty. At this point in time, Nifty has been trading around the good support zone around 89 EMA on the weekly chart. So from here onwards, it is very important to see how things shape up. And if Nifty is holding 22,000, then there are chances that any recovery, at least above 22,500, 700, this zone is we reclaim those levels on a closing basis, then only we may see some buying interest coming in. Otherwise, chances are that market may continue consolidate. As far as banking index is concerned, again, there is a support zone around 47,800. 48,000, that is the support zone for this particular index. And on the higher side, I believe the resistance is placed around 49,000, 49,200. That is the resistance zone.
Right. Hi, good afternoon, Sneha. I was amazed you said consolidation, because half of us who are actually seeing the screen is looking a pretty deep correction coming in for the markets, especially the broader markets. They're getting smoked, there was 1 or 2 days of outperformance and we were expecting that maybe things are settling, will look brighter, but that's not been the case. It is slumping, and as we speak, 3% downtick coming in for the small cap index.
So if we look at the individual counters, I believe there are a few counters which is a buy even. For me, I guess Coal India, which is again in green today. This counter, if you look, the chart structure looks quite interesting. The counter has, precisely taking support near the 61.8% retracement on the chart structure. And I believe looking at the chart structure, I think there are chances this counter may, show some further strength. So I believe if anyone wants to go ahead and long any counter, Coal India would be the preferred pick from my end. This counter has been trading about 20 DEMA today. So that is quite interesting. I believe one can go ahead and long this counter if you want at current levels as well, with a strict stop loss of around 360, and the target expected will be around 390. Sell call from my end would be IndusInd Bank. This counter, if you see, the counter has been, has corrected nearly 5% today. The counter was anyways consolidating in a very narrow range from quite some time, wherein the 89 EMA on the daily chart was acting as a resistance. So I believe the support zone, which was placed around 1,000, 1,010, should now be acting as a resistance. So I would suggest selling this counter with a strict stop loss around 1,020, and the targets expected will be around 940.
All right, so those are the picks that at least the stocks that Sneha is eyeing at this point in time. But Sneha, some of these new F&O entrants from the likes of Tata Tech, IRDA, case being NBCC and even Torrent Power, at least these are the 4 counters. What I'm seeing is that just on the first day itself, definitely not a great day to start. And well, of course, we are seeing deeper shades of red there. Any particular stock that is standing out for you right now in terms of the technical setup where there could be a likely bounce back, or you wish to flag off that more weakness could trickle in?
As of now, I would say one should be waiting, whereas very selective trade should be taken at this point in time. And from all those, I think Coal India is the one which I would prefer, and ONGC is the counter which I would prefer. Otherwise, I would say that stay light for now, and just be very selective for now.
All right, so that's the take coming in on those counters. A very interesting flash that you have on the bottom of your screen. I think Sneha you will be relieved when she reads that news. The EPFO has retained the 8.25% interest rate on employees' provident fund deposits for 2024-25, which means that no doubt you have your interest rates that are going lower. At least for EPFO, that rate remains intact. So yes, you will get 8.25% interest rate on employees' provident fund deposits for the year 2024-25. But on that note, thank you so much, Sneha, for joining us in the show to giving us your view on various sectors and various stocks at this point in time.
If you like this video, then like, share and subscribe to ET Now.